Welcome back to The Explainer. Today we're digging into SI-BONE's third quarter earnings for 2025. And let me tell you, this was a report that really lit a fire under the stock and signaled a huge turning point for the company. All right, let's just jump right in with the market's reaction, because it was loud and clear. SI-BONE's stock shot up a massive 16.2% the very next day. And get this, it was on nearly 5 times the normal trading volume. When you see that kind of move, you know Wall Street is paying very, very close attention. This was a statement quarter. So what was driving all this excitement? Well, it was a classic beat and raise quarter. Revenue came in strong at $48.7 million, easily clearing what analysts were expecting. But the real story, the part that got everyone talking, was on the bottom line. Their loss per share came in at just 11 cents. Now, Wall Street was bracing for a 16-cent loss, so beating that by 5 cents, that's a huge deal. And you could just feel the confidence on the earnings call. This quote from the CEO, Laura Francis, says it all. The key words here are sustained profitability and positive operating cash flow. This tells you the game has changed. It's not just about growth at all costs anymore. They're now a company that's actually generating cash. Okay, so what's really interesting is how they did it. This quarter wasn't just another step forward, it was a pivot. This is the moment SI-BONE starts to look less like a cash-burning startup and more like a company that can actually fund its own growth. And wow, this chart right here just perfectly illustrates that change. This is looking at adjusted EBITDA, which is basically a great way to see the core profitability of the business. And look at that swing. They went from a small loss last year to a positive $2.3 million this quarter. This is their second straight quarter in the black, and critically, the first one where they generated significant cash from their operations. This profitability, it wasn't an accident. It was fueled by just incredible execution across the board. The number of active U.S. physicians using their products jumped 27%. They added a company record 330 new doctors, and their sales territories are becoming way more productive. I mean, revenue per territory is up 16% from last year. All right, so let's shift gears and look forward. Because management didn't just deliver a great quarter and call it a day. They sent a really clear signal that this momentum is here to stay. And they put their money where their mouth is, raising their full-year guidance for both revenue and gross margin. This is the classic beat and raise that gets investors really excited. It tells you that the strength we saw this quarter wasn't some fluke. It's the new standard they're setting for themselves. And looking into next year, man, the pipeline is just packed with catalysts. You've got a new reimbursement program that should act as a major tailwind, a whole slate of new products coming out to get more business from each surgeon, and it looks like their international growth is about to speed up. So let's double-click on that first one, NTAP, because this is a really big deal. It stands for New Technology Add-on Payment. Basically, it means that for one of their key trauma products, Medicare will now pay hospitals an extra $4,100 per procedure. This is a game changer. It completely changes the economics for hospitals and should be a huge accelerator for adoption. So the crucial point here is to understand how this performance stacks up against everyone else. Is this just a case of the whole medical device industry doing well? Well, as you're about to see, the answer is a big fat no. And yeah, SI-BONE isn't just doing well in a bubble. It's absolutely crushing its peers. Year to date, the stock is up almost 39%. That's nearly 4 times the return of the big medical devices ETF. They are in a league of their own right now. This really puts it in perspective. You've got this big, mature orthopedic market that's kind of chugging along at maybe 4% annual growth. And then you have SI-BONE growing its revenue at over 20%. They're expanding at a rate more than 5 times faster than the market. They're not just riding a wave, they're making their own. Okay, so this all brings us to the big question for any investor looking at this. What's next? The stock's had a great run. Is all the good news already baked in, or is this just the beginning of something much bigger? So, for us, the call is simple: outperform. We think the entire story here has fundamentally changed for the better, and the market is only just starting to wake up to this company's new identity as a profitable growth machine. Here's the full thesis. We're modeling about $52 million in revenue for next quarter. We see a clear path to a $25 price target over the next 12 months. But the most important part, the core of the idea, is this. The shift to profitability is real. This company is morphing from a story stock that burns cash into something much more valuable, a business that can fund its own growth and just keep compounding. All right, so for folks out there with a bit more of a risk appetite, what's the play? How do you do more than just buy the stock if you really believe in this story? One idea is to position for what we call a long-term re-rating. The thinking is, as SI-BONE proves over and over that it can deliver profits, the market is going to start giving it a higher valuation, putting it in the same category as other top-tier medtech companies. One way to do that could be through long-dated call options. You might hear them called leaps. A leap expiring in 2027 would give you plenty of time for this to play out. But, and this is a big but, options are complex and they carry a ton of risk, so they're definitely not for everyone. And of course, we have to end with our usual reminder that this analysis is for informational purposes only. This is not financial advice.